Welcome to the Global Tech Leaders Podcast, where we help business leaders and individual contributors with actionable insights to hit their number and figure out the nuances of truly operating a business globally today, squeezing the essence of the lessons learned from the planet's top tech leaders. This is your guide to joining the fast track to global market scaling.
Welcome, I'm Ross Lauder, your host from Single Focus Talent. Today we are joined by Michael Cronin of Cronin & Company, director of a city centre-based accountancy practice that really gets to the nuts and bolts of how you go about setting in Ireland when you come here for the first time. As our listeners will know from prior shows, one of our top topics is definitely tax. It's talked about as an advantage of coming to Ireland, but we haven't really gone into the weeds on that topic. So I really wanted to get down to the bottom of it and talk about why it is people make that decision, very much from a financial perspective. So this is not my area of expertise, which is why I've brought Michael on today's show to really go through with our listeners how they can take advantages of Ireland as a platform to sell into the rest of EMEA. And we're going to talk about some of the topics that are quite newsworthy at the minute, but also some of those functional fundamentals that you need to have in place in order to be compliant, etc., and really leverage this as a platform. So welcome to today's show, Michael.
Ross, thanks very much for having me on. Delighted to be here, or well, socially distancing and remotely here. Thanks for having me.
Indeed, absolutely, our pleasure. I suppose all of our podcast tends to be socially distanced in the main. So I think we're discussing earlier before the call around how we're forever changed as a result of this kind of pandemic. But in any case, let's crack on. I'm curious to hear just from your own perspective, if you would introduce your own career, what's brought you to kind of where you've been so far to help the kind of companies you help at the minute.
Okay, so I am a trained accountant, working in practice, as you mentioned. I originally trained in practice, then I spent a number of years in industry, in a software company. Then from that, I went back into, as a lot of people may refer to as a vocation, into practice accounting. So back into practice now, with, I suppose it's originally a family firm, and I suppose over the years we've always worked with companies starting up, either Indigenous Irish firms or companies coming into Ireland to establish a new arm of their business. So it's it's an area that we're really excited by. There's really interesting challenges and I suppose opportunities as well for companies coming in here, and it's lovely to go on the journey with our clients when they're established and taking those first steps and leaps into new markets.
Okay. So like, from my perspective, I suppose the question I'd have is like, what triggers people to take that first step? I mean, you may hear people go, well, we're an American company, we want to use our US entity. Why would people choose to set up an Irish entity? And we're obviously a fully fledged member of the European Union, have been for a long time. And contrary to some misbelief, there is a very big distinction between the Republic of Ireland and the United Kingdom. And after Brexit, we are firmly staying in the European Union, and that will continue. But maybe if you would share with us, why is it people need to set up an Irish entity, and maybe what is the kind of critical mass these companies reach before they do that?
We found that there's never, I suppose, a set trigger point, Ross, that will bring an Irish or bring a US company into Ireland. It tends to be that their market has grown. They've already identified that they need to expand or need to get a foothold within Europe, right? So their focus turns to Europe, and ultimately, where do they set up in Europe, right? And we spoke before we came on just about the kind of the three T's of establishing their operations, and the three T's being tax, talent, and tradition. So what we've found is a lot of US companies, they will I suppose be led by the larger multinationals, the Googles, the Facebooks that are already here, and it's really a case of if it's good enough for them, it must be good enough for us. The the Irish tax obviously system is relatively straightforward, and on the very high level is really beneficial for corporations setting up here with the 12.5% tax rate, which is always a topical area. So I suppose that triggers the initial focus for US companies coming into Ireland. So when they actually then select Ireland as a base to look at setting up, I think one of the things then it becomes rather operational or softer things rather than the financial aspect, is that there's a huge talent pool here in Ireland. We've some of the most talented, particularly in the tech sector. There's massive talent there coming out of the universities, either universities or coming in from other EU countries into Ireland to work within these multinationals, and startup companies as well. There's a great startup culture in Ireland. So the talent pool, and then that coupled with the tax incentives and tax breaks are just a massive draw for a lot of US companies here. So that's I suppose where we see it, that's largely the main reasons that initial conversation starts, and that initial focus starts within Ireland.
Okay, and that 12.5% corporation tax rate you mentioned is obviously very favourable, and if I've talked about this on prior shows, there are plenty of jurisdictions around the world that have a 0% corporation tax rate, which tends to lead to investigations as to why such places are used. And I've often heard feedback from people saying Ireland is a tax haven, and I absolutely and utterly refute that, because one of the primary criteria for a tax haven is that you have secrecy, which we absolutely don't. We're again a fully fledged member of the European Union, and transparency is key in that union. So
and if I could just jump in there as well, like that's a really good point that you've made there, Ross, is because the Irish Revenue Commissioners and the equivalent to, I suppose, the IRS in the US, they're a very proactive organization. They're actually very helpful, engaging for companies coming into Ireland. Some people have them pegged as I suppose the bad guys here, but they're not really, and they're very helpful, and there is a lot of I suppose communication with other tax jurisdictions. So on a number of points, I actually I think we're actually hugely lucky that with the taxes and the Irish revenue here and the exchequer in Ireland, I think they're an asset if they're used correctly.
I would fully agree with that point as well. And I see us very much as that halfway house. We have other jurisdictions around Europe that are 25, 30%, etc. And my attitude to that would be, well, guys, you have the exact same tools in your exchequer as at your disposal. It's an equal playing field. And ironically, we actually collect more corporation tax per head of capita than any other country in Europe as a result of our policy. And our, I suppose, play in the world has always been, well, if we lower our corporation tax rate, it'll create jobs, and people having jobs is good for society in general. I've talked about this on multiple podcasts in the past. And second of all, the exchequer will get that revenue returned by way of consumption and payroll taxes as well. So
correct. Yeah,
that's very much our mantra, as it were, and our selling point as a country. So I suppose, let's say we've made that decision. We're in Silicon Valley. We're a startup. We're well funded. And we really, really feel that we're seeing increasing levels of interest from Europe. I need to set up an Irish entity. Like, what do I do next? How does that process work? What's the equity structure, directors, and compliance? How do I go about that process? If you could share that with us.
I'd love to say there's a one fit for all. It's not necessarily the case. So you really need to look at it on a case by case basis, because there are a number of options on what way you structure the business, what way you structure, whether you look at a standalone company here in Ireland. That'll lead on to the decisions that I suppose are coming from your parent company or the US entity. Do you set up a standalone single Irish company? Do you set up a group structure? Do you set up a branch operation here in Ireland? And then based on each of those decisions that you go down, so say you have those three routes, one being a standalone company, one being a subsidiary or group style structure, or the third being a branch operation, then based on those decisions, they're going to lead you down different avenues of what you need to do next and the steps you need to take. So, you know, really, if you're looking at making this decision, that's where you need to kind of have the conversation, or start having the conversation with a professional advisor or you know, professional services company to tease out what is the best route and the best option for you and your business.
Okay, so let's say, I suppose, run through a scenario. I mean, for example, I'm a limited company. I'm an Irish entity. I'm very much kind of in that SME sector as well, and that structure suits me. As there is also a holding structure you can have above that when you want to repatriate profits and you want to invest in other vehicles where you wouldn't tax, and I'm very aware of that as well. But I suppose the problem you'll have then later is of what I'm imagining you're alluding to is stamp duty and different levels of that in order to get another company as part of another. But let's assume a scenario of a LLC from the US, which is likely to go public in the next number of years, and they have decided to set up an Irish entity. I suppose those decisions to do ownership structures, as you mentioned, would be governed by the level of revenue you wanted to make.
Correct.
And secondly, what you want to do with those funds. So, for example, I know that when Microsoft purchased LinkedIn, they actually used a substantial amount of revenue that was held overseas and then borrowed the difference. And the reason that they did that was that tax in the US would have been preclusive to have that transaction happen there. So they used an Irish entity to buy that and used and borrowed money against the cash they had in the bank because the interest rate was less than the tax they would have paid in the US. So I suppose maybe if you could just share with us what, and again, I totally appreciate not a one size fits all, but maybe a scenario or two you've encountered where it's that type of, maybe it's a Silicon Valley startup, they're moving here, they're growing, they're probably at between 50 and, $150 million. And they really see Europe as adding, another 50% to that. What structure might work for them, or what examples could you share from your experience?
In a case like that, something that's scaling to that size, you really want to look at a subsidiary, where it's either 50+% held by the parent operation, because ultimately you're trying to break into the European market using Ireland as your European base, right, or your stepping stone into the European market. So really what you're looking at there is a subsidiary style group structure, so that if there is repatriation of funds, that you're actually avoiding any major tax implications, because you're moving funds within your group structure, so you can ultimately move actually the cash reserves of that back into your US entity. Now you will be liable for corporation tax on the profits that are generated in Ireland and across Europe, right, in the European market. Now you may have, depending on again where I mentioned earlier, the Irish tax system is relatively straightforward. Now, don't get me wrong, like any tax structure, it's got its intricacies and finer detail and small print. It doesn't tend to be. We've got one tax structure for Ireland, and it ties into the European tax structure. Whereas in the US, look, as you know, and a lot of, I suppose, your listeners and companies, you've got state taxes, you've got federal taxes, it can vary depending where you are in the States. So within Ireland, it is simpler, right, in that respect. So if I was a US company coming in, like you mentioned, I would definitely be looking at the subsidiary style structure. And then again, it depends on what the plans are, whether you want to become, hopefully, as everybody does, the next unicorn company, or whether it's just a break into that European market and continue to scale across.
Okay, and That's helpful for sure. I suppose you mentioned there a point that I picked up on, which was over 50% equity held by the US parent. So that's allowed under Irish law. We're very friendly towards foreign ownership, etc. Could you maybe just share with us some of the ownership structures and obligations, you know, in terms of the company law piece and what those kind of splits look like, if you would?
Well, as I mentioned earlier on, the ownership piece, what we found is that some people have come in, depending now, if they're really at the startup stage, they may look, and it is an owner-manager startup rather than, you know, and they're really trying to scale, and it's you know, 1 to 5 million, maybe 10 million turnover that they're at, that you might have one individual who's actually in the driving seat of it, and they may look at holding all the shareholding. They have a specific reason that they want to have just their Irish entity separate from the US, and maybe at a later stage doing a reorg of the business and moving the shareholder into a parent company and creating that group structure. So, you know, we found that happened. That's happened in the past with clients, and ultimately they ended up with that subsidiary structure. It's a very I suppose it's just that there is so many different scenarios. The branch operation isn't something that people tend to lean towards, because what you're ultimately doing in that case is you're nearly using Ireland as a cost structure or a cost center for the business rather than a standalone entity, either in or out of the group structure. In that case, then if you are to hire employees, you technically have to get your US company to register employee taxes and the corporation, well, not corporation taxes because everything, but for VAT and for PAY, you will have to register the US entity, which just makes it a bit more difficult, particularly if your reporting is in the US and you're using a US financial services company. They then have to become, I suppose, either outsourced to an Irish financial services company, or else they will have to, you know, they'll have to be up to speed with Irish legislation. So you've got, you know, kind of a messy situation with that. So I wouldn't.
I guess you want the ideal from a high level would be allows you the greatest flexibility based on all of the information that you have right now, you know, in terms of skill. Do I have, if I'm that person, do I have any obligations to have an Irish director or equity partner locally?
An Irish registered company does have to technically have, an EU director, right? Now there is a bond that can be put in place. Now this is more around company secretarial, not necessarily my area, but I know Philip in our office here is the head of our co-sec department. He can bring me up to speed on it, but you do have to have an EU resident director, right, as distinct from an Irish resident director, obviously now being a member of the EU. So if you don't have that, you can put a bond in place with the company's office, right? I'm not sure what the value of the bond is, but it's a couple of €1,000, so that you can actually potentially trade with a US registered director. Under the new Companies Act, 2014 Companies Act, you can have a corporate body secretary as your company secretary, who can be a nominated, again, professional services firm can provide that service for you. So you don't necessarily have to have an Irish registered secretary either. So you know there is ways to get around the you know, having an actual Irish presence as such.
Okay.
Because that tends to be, like Ross, that tends to be one of the questions that you know, it's funny you mentioned, that's one of the questions that we find, you know, people looking to set up, US individuals looking to set up in Ireland, they come in and they're worried that they don't have a presence here. They don't have, I suppose, a trusted individual go down as a director or secretary and form that company structure here in Ireland. But, you know, it doesn't necessarily need to be the case, because what they sometimes look to do is, well, you know, we've earmarked that we're going to get 4 or 5 employees in this new company, and maybe I'll ask one of those to go on as the Irish resident director. And that's not something that needs to be done, you know, and I don't think it's necessarily fair to ask, potentially a new hire to take on that sort of responsibility.
Right. Okay. Okay. No, that's a key point actually, and that's a very helpful piece of revised legislation that's come in that will allow further levels of flexibility. So that's I think a key point. You mentioned there about V.A.T, and for our listeners not familiar with it, it stands for value added tax. Although I don't know why, because I don't see the value it adds, quite frankly. But for another day, can you just
Absolutely.
explain to us what that is and when that applies?
VAT it's effectively the sales tax in the US, or form of sales tax. And again, we've got varying rates here in Ireland. It's basically it's a tax charge on the supply of goods and services, right? In short, is effectively what it is, right? The VAT rate here in Ireland, we've 23% is your standard VAT rate. Your reduced VAT rate is 13.5%. And then you have a zero rate, and then an exempt rate for certain products. But for software, the majority, well, not even software, for the majority of products and services, 23% is the VAT rate here in Ireland, which is charged on goods and services.
Now, if I'm an Irish company, from my own experience, the Irish market is a 12th the size of the UK. And quite honestly, we don't sell a lot indigenously in this country. We more sell into the bigger markets like the DAC, the Germany, Austria, Switzerland, the Central European markets, and the UK. And obviously with Brexit, that has its own implications. But why is it that when I sell to those entities, I actually don't charge VAT on my services as a software industry?
Again, it falls under the EU legislation and VAT with the inter-community transactions within the European Union, right? So with that, if you're selling business to person, right, you technically will charge VAT on the supply of goods and services. But if you're charging business to business or to a business that is a VAT registered business, then the supply is exempt from VAT. There's a thing called the reverse charge rule, which is put in place. So it's effectively self-accounted on the purchaser side. They self-account for the VAT input and the VAT output. So you effectively, it's not that you're effectively zero rating goods. You're just not charging the VAT to business registered customers, right? If you were charging, if your Irish entity is selling outside of the European Union, then again, there's no VAT charge to the likes of a US, well, sorry, not a US company, but a US company, send to a US company, or if you're selling into Asia, again, it's VAT exempt sale.
Yeah, and I guess that would apply to countries that are European countries, but not necessarily in the European Union. So my own experience has been that of the software multinationals I've worked for, they've always sold B2B in the main, and
Yes,
I've never charged VAT as a result of that. And just for our listeners as well, it's important to note that you would also incur VAT charges on products that you buy and services that you incur locally. So that can be squared against a net when you're processing a return. So if I have charged 10 grand worth of VAT in this particular period, but I've incurred 2.5K, then I have an obligation of a net of 7.5. And it's the way to think of it is, it's not your money. It's money that you're collecting on behalf of the government. So from a cash flow perspective, it's a very neutral type of transaction.
I think the key there, what you said, is cash flow. It really is. It's not whenever a business is looking at, I suppose, profit and loss. It's all excluding VAT, because really you're collecting on behalf of the revenue or the exchequer, and you're passing it on at a later stage. So it's just the timing of when it's paid, right? So it's really something that should be considered in cash flow, because the way, I suppose, it's reported here in Ireland is you either return your VAT filings on a bi-monthly, quarterly, or annual basis, right? Depending on what you elect for. Okay. So, for argument's sake, if you have VAT on sales for January and February, that won't be paid and filed until March, right? The 23rd of March.
Right.
Paid on or before the 23rd of March. And then that's if you're bi-monthly. If you're annual, then you may be on a standard direct debit, paying it off, and then the actual return is filed, and if there is any balance or potential refund to be squared off from the payments that you've made throughout the year, that all has to be filed and completed by the 23rd of January the following year. So.
Okay, so that's the key point. I mean, as a business owner, I'm very familiar with the bi-monthly filings every third month for the prior 2 months for sure on collected payments. What are the implications of failing to file that return from your own experience? And can you maybe share with us a story or two of assumptions that were made, or maybe just it was genuinely forgotten about? What are the kind of implications there from a revenue standpoint in terms of chasing people, etc.?
Okay, so I suppose one of the big problems we actually see initially is companies set up here in Ireland. They set up their entity, whether it's standalone or it's group or whatever it may be, and they set up here in Ireland. They register for taxes, and they do all those steps, and Ross, and they do all, I suppose, the hard yards on the initial setup, and then they forget about the filings. They forget, or they're not aware of their filing requirements, right? And then what tends to happen is whether they have, I suppose, an actual physical office here, or they have a PO box, or a separate registered office, it might be another number of months before they actually get the correspondence from the revenue to say that they haven't met their filing requirements.
I see.
Now, I suppose the fear that everybody has then is there's interest and penalties on non-filing and late payment, right? So it's interest and penalties, and then ultimately, I suppose, if you're non-compliant for long enough, you also run the risk of revenue investigation or revenue audit, right? Which is, I suppose, there's never really a situation that you want to find yourself in.
Mm-hmm.
But again, I go back to what I mentioned at the very start. Like, we are very, very fortunate here with the Irish Revenue Commissioners. They are very helpful, and they're understanding. So, like, what I would say, and what we found from our experience, if a client has found themselves in that situation, or they come to us and they're in that situation, the first thing we do is communicate with the Irish Revenue Commissioners, right? We engage with them, we contact them, we outline the situation, and then we work with the client to get the records up to date. All right, you get your filings, everything up to date, and then I suppose then the focus turns on to the actual the client themselves, and what sort of procedures or operating policy they need to put in place to ensure that they don't miss those filings again. Whether they're going to look after it internally, or whether they're going to engage with our services or services of another professional firm to look after that for them. But that's one of the big problems we see with the initial setup is they do the hard yards, and then they forget about the ongoing, right, day to day.
Okay.
So that's definitely an issue we found. Another case, I had a company here that they were selected for a revenue query, or an aspect query, which potentially can evolve into a revenue audit, and the revenue had selected V.A.T as the query point, because they wanted to understand why the company hadn't been charging V.A.T, and they wanted to ultimately see who they'd been billing upon returns. And again, it was a case of they came out to the premises of the company. They interviewed the directors. We went through the business model, the process of what they did, what they didn't do. And it was a case of them looking at the invoicing system, who they were billing, their major customers. And that was satisfactory for the revenue. They were happy then with what they saw, how things were filed, how things were prepared, and there was no issue. So again, I wouldn't be worried about it's not a situation you want to find yourself in dealing with the Irish Revenue, but I wouldn't be losing sleep over it if you find yourself in that position, because like if you work with them and are transparent and helpful, there shouldn't be a major issue off the back of it, right? Sometimes there is. You have to put your hand up. If you haven't done something, you may be liable for interest and penalties. But to mitigate those, again, it's communication and engagement.
I would agree.
Can't stress that enough.
Yeah, I think that's key. And from my own experience with them, if you do engage them, they're very cooperative. If you admit to a mistake, there's usually a penalty of, I think it's 3%. For your first offence, as it were. But if you're in any way hurting them, or you're being non-transparent, as it were, the penalties can be 100%. And
just simply difficult. And the penalties employable revenue are mitigated depending on the circumstances, whether it's there was intent to mislead, whether whether it was not intent, whether it was just a clerical error. So again, engaging with them and making them aware of how you arrived at a situation, good, bad, or indifferent, is crucial to that. The interest element that they charge is fixed. So there's no kind of interest and surcharges. There's no sort of movement in that area. So if you don't file a VAT return and there is a liability on it, you will be hit with a 10% surcharge, right? Potentially on that, or if there's a corporation tax return that's filed, you'll be hit with your 10% surcharge, and there's no kind of getting around that. So that's just
I suppose it's awareness at the beginning and having a trusted partner that can guide you through it, like yourselves, in the whole process. I think from our discussions there, we were obviously talking around corporation tax, and that allows more cash to be available to hire people. So let's kind of dive into that. What our US counterparts will be familiar with as payroll taxes. Could you maybe just take us through the payroll tax system as it applies here in an Irish context?
Okay. PAYE, pay as you earn, is effectively the system that the majority of Ross, you're pretty aware of it with your own business. Is the system, or the phrase that you'll hear, or revenue referred to it as PREM, right? Effectively the tax system in Ireland, we tax employees at source. There's effective rate of 20% up to a cut-off band in around 38,000. Anything above the 38,000 is charged at 40%. And then on top of that, we have the universal social charge, which again is staggered at various rates, 0.5%, 2% and up, and that caps out at about 8%. We then have employers PRSI and employers PRSI, which the employers PRSI is around 11%, and the employees PRSI is at 4%. So effectively, as an employee, you depending on, I suppose, your earning capacity, you're looking at, you're looking at a tax rate, an effective tax rate that caps out here in Ireland at 52%, right? Which is people, I suppose, always have a gripe with that, because paying over 50% of your earnings to the taxman doesn't always doesn't always sit too well with people. But that's the system we have. It's the employer then, and from an employer perspective, as I mentioned, that's all taxed at source and processed through the company payroll system, or the company payroll tax. The requirements that the company itself have then are monthly filings under the PAY modernisation system, or PMod, which you effectively, again, if you are running payroll, monthly payroll for the month of January, that is due to be filed then so on a real-time basis now, whereas previously it was again the 23rd of every month. It's now moved under PMod to a real-time situation. So as you pay your employees, you should be returning that information to revenue, right? Giving details of how much effectively you've been paid, and stopping the tax then on that, and ultimately paying them the tax that stopped. So again, like the payroll system, it's not, I don't want to say it's not overly complicated. It can be slightly confusing for I suppose an employee looking at a payslip and all these different deductions, or an employer looking at a wages report, seeing all these deductions. But They are relatively standard and the same every month. So, you know, once you get a good understanding of it, it's, you know, it is relatively straightforward, right? And transparent for, you know, any company setting up here.
Okay. So that's a clear kind of structure. I suppose the takeaway for me, if you are a US multinational and you're hiring somebody in this country for €100,000 as a gross salary, it's going to cost you €111,000 in actual returns. So
yeah, because your employer's PRSI, sorry, which I mentioned briefly, but I didn't actually mention how it was applied. That employer's PRSI is paid by the company on behalf of the employee. So correct. The actual cost for employing an individual of 100,000 will cost the company 111 effectively.
Yes, and that's what I refer to as the employer PRSI uplift. It's my own internal name.
Okay.
But just from a budgeting standpoint, I think it's quite relevant. And we can discuss perks and benefits, etc., on another show around healthcare, around gym memberships, around education allowance as well, etc. But are there any benefit in kind taxes appropriate for where an employer would pay things like that on their behalf?
You know, I suppose BIK, a lot of people talk about that and benefit in kind, and it always raises its head when people talk about a company car. But in effect, benefit in kind is anything that is provided by the employer that has a monetary value attached to it or associated with, that's provided by the employer to an employee. So, you know, you could charge BIK if they were provided accommodation, living accommodation, if there was, you know, healthcare. There's numerous things that can attract benefit in kind, and effectively there's a value placed on it, and then that ultimately is taxed, and that's kind of the core of what benefit in kind really is.
Okay. So just something to be aware of from a budgeting perspective, as to a factor to consider.
Without a doubt, because if you're looking at an employee and you're trying to work out what the cost of that employee to the business is, and you have created, I suppose, an employment contract which has a base salary and then has a number of perks on top of that, you need to understand what the cost of those effectively are and the tax element on that when that's applied. Plus then, as we mentioned, the PRSI employer uplift, as you refer to it as, what that ultimately is all going to cost, you know, you as the employer, so that you can correctly project what your cash flow is going to look like.
That's a great point. No, I think that's a very fair thing to discuss, because you set the expectation from the beginning. While it might seem like our rates of income tax are high, that's more of an individual thing. And to be fair, we're relatively comparable with other Western European countries that are inside and outside the European Union. The majority of them would, that have that level of tax. And that's, you know, a political discussion for an entirely different day. But I suppose the point being is that there's a balance between being able to find highly employable, talented people and operating in a jurisdiction in a very transparent fashion. So it's all very well being in the Caymans paying 0%, but you can't get the languages of German, French that can sell software as a service. So these are all kind of factors that play into the melting pot of being able to make that decision. So I suppose just from a very operational standpoint, Michael, could we talk a bit about banking and currency and holding US dollars and euros and pounds sterling, etc. Just to outline, we obviously use the euro. We've been in the system since its launch, etc. Could you maybe just share with us how some of your clients operate their banking and what suits them, and obviously dependent on fit in each case, but maybe share with us some of those details if you would.
From our experience, what we find tends to happen is that our clients will set up with effectively one of the, call it the high street banks here in Ireland, whether it be AIB or Bank of Ireland, for their banking facility for their Irish entity. Now, when they do that, they initially will set up a Euro bank account as their standard trading account or their current account, and then they will either in conjunction or tend to follow suit is they may say, excuse me, they may set up a US dollar bank account as well, all right, for the transfer potentially of currency across into you know, from the parent company across. Now, really, when it comes to currency movements and that, what we found is the likes of Currency Fair and a couple of the style currency providers or currency transfer facilitators, they really, their benefit to a company is massive, right? The rates and the ease that they can move currency for the likes of US entities setting up in Ireland tends to be like the rates are really competitive, and the ease of the way it's done is fantastic. So I can't to be honest, I can't speak high enough of operations like that, and the benefit that they have to a lot of our clients, right? They tend to be a lot better than the I suppose I'm shooting myself in the foot talking about the high street banks to say that they tend to move a lot quicker and be a lot more user friendly for clients when they're moving kind of large levels of funds. So we found that they're quite beneficial. You've obviously got the likes of the neobanks now starting to grow.
Yeah, I would agree with that. I think it's been an interesting journey when the likes of Revolut and there are a number of other ones as well are now setting up business accounts where you can transfer money seamlessly with an IBAN. So for our listeners who aren't familiar, it's the standard of international banking accounting number that we would use to transfer across the European Union, certainly. But the indigenous banks themselves, or the high street banks, are very, very profitable in the currency transaction space. And there are more competitive ways of transferring to US dollars. But I suppose one of the points that you made there was that it is entirely possible to have a US dollar based bank account in Ireland, as well as having a sterling bank account in Ireland, as well as some of the other currencies that exist that you might want to actually sell into a country. Yeah. So, for example, Swedish kroner, Swiss francs, etc., where Switzerland is not part of the European Union, but an important economy. Sweden is in the European Union, but uses their own currency still. And there are a number of different countries that have chosen to do that. The UK was an example of that. They are now in the process of finalizing their exit from the European Union, but maintains their currency. So it is possible to hold those accounts in an Irish jurisdiction in that respective currency. So what you might do is you might sell into the UK, you might charge your customers in sterling, keep them in that sterling bank account, but then when you need to repatriate that to US dollars, you might wait and get a good rate from Currency Fair and bring it across to your US entity. Do I have that about right?
You do, no, and that's in fairness, Ross, it's really in depth, because I think some clients, you know, the currency market, unless you really know what you're doing, I think can be it can be a very lucrative place. You know, there'll be a lot of money made, but I think if you don't know what you're doing and you're looking at forward buying or any of this type of stuff, it can get, I suppose, overly complicated and takes the focus of a lot of individuals off their core business, right? So, you know, it's definitely something that we would advise clients to, you know, if they are looking to get expert advice on exchange, you know, currency exchange and moving to large funds is definitely an issue, because the basic operations there's no issue. Like you said, you can hold multi-currency bank accounts here from our indigenous banks in Ireland. There's no issue in that respects. There's actually moving the funds, and that is the timing of that is crucial, because it can have a massive impact on your P&L in currency gains or losses.
Yeah, no, I've worked for many multinationals, and I suppose it comes as quite a shock to an entity looking to set up here that they're going to be transacting potentially in multiple different currencies. So what tends to happen is initially coming from a homogeneous market like the United States, you would only ever be selling in dollars. And then as you move into Europe, what you might decide to do is sell in two currencies initially as well as US dollars. And that would probably be pound sterling as well as the euro, because they're the biggest and they're the ones that make the most sense. And from my own experience, the Nordic countries are more than happy to buy in US dollars or in euro. They're very familiar with it. And, you know, their populations of between 5 and 8 and 9 million people. And they're just used to it. They've done it for quite a long period of time. And as you become more and more established, you will then break out into those respective currencies as and when it makes sense for you as an organization. And one of the key points you mentioned there was forward buying. So when I worked in Dell, one of the most important pieces of news we got in a new financial quarter was, what's the dollar hedge rate against sterling? So we were selling into the UK in pound sterling, but we were all reporting and our targets were all done in US dollars. So if we had a very, very strong sterling, happy days. It means we had to sell less product in order to hit our target. Whereas if we have a situation where the US dollar is stronger, our targets have gone up quite substantially and we have to sell more product in order to hit our numbers. So that happened on a quarterly basis, and Dell went to the bank and bought a rate that would secure against the US dollar on a quarterly buying basis, and meant that no matter what happened to either of those respective currencies, they knew for sure they could execute on that hedge rate in order to repatriate US dollars. So it all depends on your outlook. Some people can buy an annual rate, and like anything, that comes with a premium against the current rate. It's like an insurance policy that you're buying against the fluctuation in the currency, etc. Now, things have changed, and since I was working in Dell, the pound to dollar rate was 2 to 1 almost at one point. You know, we were at crazy numbers, and because of central banks printing lots and lots of currency and money and all those sorts of things, again, a political discussion for another day, the rates have somewhat leveled out, and euros and dollars and pounds aren't wildly different, certainly not as wildly different as they used to be. But I think a hedge is an important thing that particularly when your company IPOs or is about to IPO, you really need certainty, and you need to know that.
Well, I think when you get to that scale, if you're looking to IPO, without a doubt, you need to have you need to have a strong understanding around that when you get to that scale, because I know from a number of clients we've dealt with, as long as the rate is relatively good, they'll move funds. Unless there's a massive variance, they will hold, and they'll buy their time. And when they when they make the decision around currency, because it's look, as we said, and as you mentioned there, it can make a massive difference on sales targets and that. So, you know, for a startup or setup, it's not always it's something that needs to be taken into consideration, but it can be a minefield, really, like of transactions.
And there's nothing that markets hate more rather, is uncertainty. And you will always report back to the US entity in US dollars. That's just, I mean, it's what I've known all my career, but it's something that we need to kind of translate. And again, it's having that conversation around European business and maybe adding layers of complexity and potentially additional costs, but it's a very lucrative market that would make sense for them to go into in any case. I suppose as we kind of progress here, I'm very keen to talk about a topical item which before COVID-19 was all anyone talked about, quite frankly, which is Brexit. And I'm curious on your take on that. Ireland, just to be clear for our listeners, Ireland in no way voted for Brexit. We are staying in the European Union. We do have a border with the United Kingdom in Northern Ireland, which is wide open and which will remain wide open. But there's obviously an implication for Irish trade. My sense of it is that it really impacts on physical goods that are going through the border in Northern Ireland. And they've said that they will put the border down the Irish Sea. And it's a complicated solution that allows for checks on goods going into the United Kingdom from a port through the Irish Sea. But I suppose from my own take, I would see it from a software perspective as beneficial. Any jobs that were potentially going to London may not now as a result of that. You don't require a visa to come into Ireland as a European Union citizen. And even after the UK leaves the European Union completely, we will maintain what's known as the common travel area between the Republic of Ireland and the United Kingdom for a lot of historical reasons. We can work and live in each other's countries. However, European Union citizens will no longer be allowed to go to the United Kingdom after December of this year to live and work freely without having a job in place, etc., or visa sponsorship, rules of which have still to be decided. But I'd be very keen, Michael, on your own personal take on this, or maybe what you're seeing in business as a result of Brexit.
Yeah, like I think you've touched on the major points there, really, Ross. Right, the Brexit is going to have a massive positive and negative impact, I think, for Ireland. Right, it's, you know, some people would argue it's kind of crystal ball stuff, but what we found at the moment is there is a lot of UK companies beginning to look at setting up an operation here in Ireland. A lot of US companies then may have been deciding whether it's going to be the UK or Ireland to set up in, and now they're all looking at Ireland again, because, you know, you've got the free trade market between the European Union, I suppose the talent pool that we talked about, that's free to move within Ireland, UK, or Ireland, the EU as well. So, like, it's becoming, for a lot of these subsidiaries and companies looking to set up here, it's becoming more, I suppose, favourable, and I suppose the scope is narrowed for us as the last, I suppose, English-speaking country in the EU. So, you know, I think we're benefiting in that respect, in that people are choosing Ireland to come in, set up. Now, I think it's going to have a massive impact on, I suppose, our export market, because we do still hugely rely on the UK and the trade between the UK. So tariffs and I suppose duties and that are brought in, that can have a massive impact. But, like, it's yet to be seen when it's all actually ironed out. And I think we've a long road ahead of us in that respect. But in the short term, I think if we can I suppose, benefit by those initial startups and those setups coming into Ireland and using Ireland as a stepping stone into the European market, I think it's great. It's great for us. So
yeah, I would share that sentiment. And you made another good point there as well around the English language. So we speak our own version of the English language, some might say, but we have historically benefited quite greatly as a stepping stone into Europe, because it's a common language we share with our North American colleagues, and it makes that business environment conversation much easier. You don't require translation into local documents, etc., if it were to be French, German, Italian, whatever the case may be. And I think as the final and only remaining member of the European Union that has English as a first language, I think that will provide further opportunities.
But I think it's actually strengthened our position a little bit in Europe on a worldwide perspective, because of that. We are, I suppose, call it the younger brother beside the UK that will be, I suppose, the focus for companies to set up in and move within. Like, you know, we spoke before, Ross, about, mentioned there about the English language and that. And look, I know it's only one point, but I suppose they're all pieces of the puzzle for companies to make that decision to come and taking their step into Europe, in that it just eases that transition. If there's no, if the tradition is there that there's multinationals setting up and they're here already, they're established, the tax rate is strong, there's no, I suppose, barrier on language. So the easier we can make it for US companies to come in and set up, the better. And I think the Irish government in particular are so aware that, it have been for a long time, you know, with the likes of the IDA and the American Chamber of Commerce, all these different, you know, bodies helping support that transition across. I think I think we're in a really strong position. I think we've seen it over the last number of years, both in large multinationals and then just smaller SMEs coming in.
Yeah, I would agree with that. And I see that trend being accelerated. And I almost think, like, Brexit in some respects is a catalyst that we kind of needed.
Yeah, I suppose it's a bit like COVID-19 and working from home. It's just forced. It's forced a lot of businesses to implement, I suppose, remote working. The change of office space, turning an office space into hot desks, and I think we're moving away from a lot of the traditional things due to COVID-19. But I think it's nearly been forced upon us. So it's a bit like Brexit has almost forced.
Sure.
The decision for some of US or North American companies to come here, which is, look, if we can benefit from it, absolutely great. And if the US companies then can benefit from it as well, I just think it's a win-win for everyone.
Yeah, I definitely support that perspective. Okay, well, look, as we wrap up here, I always like asking guests how they define our culture. And what I mean by that is, what does the crack mean to you? CRAIC.
The crack at the moment for the last 2 months. The crack, I suppose, for US listeners, really is the it's the fun, it's the culture, it's the another phrase is the banter. It's just that social interaction in Irish people. I have to say the crack hasn't been massively exciting in the last 2 months between, I suppose, Zoom parties on a Friday and Saturday night to catch up with family and friends. But
sure.
Look, in general, I think Dublin, Ireland, over the last, say, 10 years is a phenomenal place. I think in general, there's a real spirit of entrepreneurship, innovation. We've got some really exciting kind of companies coming here, setting up. We've got a lot of indigenous companies setting up with some really innovative ideas. You've got a lot of government bodies and a lot of people pushing that culture. Then on a general social level, it's great. Like the amount of, I suppose, bars and restaurants offerings that are out there now is just, I suppose, second to none. It's if you look at Ireland now compared to 15 or 20 years ago, I think it's a fantastic place. I really do.
Yeah, absolutely. I always kind of remember that episode of The Simpsons where they go to Ireland on St. Patrick's Day. You couldn't get more stereotypical if you tried, but they get out of the airport in the taxi and all they see is tech companies everywhere. And they're like, this isn't the way Grandpa Simpson remembered Ireland back in his youth. It's very much transformational. I think that the crack really speaks to our sense of fun and not taking ourselves too seriously. And we actually managed to get all the work done, but we have a bit of fun along the journey. So that's kind of what it means to me, if you'd share that sentiment.
Yeah, and I think like it's pretty reflective in that Irish people seem to be welcomed in, or we're very welcoming wherever we go, right? I've traveled a lot around the world, and everywhere I go, you're always sort of greeted with, they say that our Irish people are very welcoming. I actually think it nearly goes the other way around. The people are very welcome to Irish people.
That's good.
Which is great,
Yeah, I mean, you might say it's because we haven't invaded anyone, and that's kind of why we haven't really pissed anyone off from a global perspective.
Very good. Yeah.
I think that's kind of been sort of the sentiment, as it were. But look, I really want to thank you, Michael Cronin of Cronin and Company Accountants, today for sharing.
Not at all. Yeah, I really enjoyed the conversation. I hope kind of gave you touched upon a couple of insights for you guys, and if there's anything else.
Very much so. No, and I appreciate all the value you gave and the stories you told and experience you have around how to get started and operate here very successfully. So look, I hope to speak to you again in the future on further shows.
Excellent. Thanks very much, Ross. Good to talk to you.
You've been listening to the Global Tech Leaders Podcast, designed for both established and aspiring career-focused tech rock stars, as well as helping leadership figure out how to speak global in today's multicultural world. For further details, check out sf-talent.com.